today's session. So today we are going to discuss chapter number 13, that is group audits. Now, I hope that you have already gone through the chapter, you have read once, and if you have any doubt, then please ask, do not hesitate in asking doubts. Okay, so please ask the doubt if you have any doubt. So also with respect to previous chapters, previous areas that we have discussed, if you have any doubts, you can ask at any point in time. Okay, so not only on the chapter number 13, but any previous topic also perfectly fine. Okay, so let's start this chapter. Let's start discussion about group audits. Okay, now, what is group audits? Can anyone tell me what do you mean by group audit? What do you understand when the term group audit comes to your mind, or when you hear this particular word? Anyone? What is group audit? What do you mean by group audit? CFS, okay, but is it only consolidated financial statement when it comes to the group audit? Consolidated financial statements are one aspect of the group audit. So it's not group audit only, CFS is not the group audit, but one of the aspects of the group audit. Basically, when I talk about group audit, we will not only see about consolidated financial statements, we will not only see about few provisions of the company sector. No, we need to understand how group audits are carried on. Simple in simple terms, if I talk about, let's say you are the parent auditor. Okay, you are the principal auditor that we have already seen in SS 600. Now, how to implement that particular thing on ground, how to be a principal auditor, how to perform audit of a consolidated financial statement, and how to perform various different procedures with respect to the consolidation. When it comes to the compliance, when it comes to the procedures, when it comes to the responsibilities, everything we will understand. Okay, so you can say that here today we will be dividing our whole discussion in basically 6 parts. Okay, what are those 6 parts? Number 1, I will discuss about group audits. What is group audits? Number 2, we will talk about legal framework. What legal framework is applicable in case of a group audit. Number 3, responsibilities of auditor. It's very important. What are the responsibilities of auditor in case of a group audit? Then we will discuss about audit procedures and considerations. Audit procedures and consideration. Then we will talk about reporting on CFS. And I will, along with the reporting on CFS, I will show you some examples. I will show you a live public report wherein we will be discussing, how reporting is done and some special considerations with respect to group audit. Okay, so I will divide the chapter in this particular way, and then we will discuss area by area. Now, let's start with the general group audit. The general, what do we mean by group audit? Now, when it comes to the group audit, basically, it is nothing but we are doing the audit. We are considering all the aspects that is there till now with respect to the audit that we have discussed. For example, what is the legal framework applicable? what are the responsibilities of auditor, what is the audit consideration. When you consider everything, in case of a audit where there is not only the entity involved, but you are doing audit of some of the portions of the your subsidiaries, your components. Okay, in that case, that is a group audit, when the audit is not only about the entity but it's about their subsidiaries also, where the financials of the subsidiaries are merged in the financials of the principal company. Okay, so you can say here that it includes identification of components, then obtaining financials of components. Then you can say, once I obtain financials, I need to perform consolidated adjustments. And then on the basis of the consolidated adjustment, whatever consolidated financials are there, okay, I have to audit those consolidated financials and then reporting. That is the group audit. Now, these consolidated adjustments are basically passed by management. We then audit these consolidated financials, including the consolidated adjustments. Now, obtaining of financials of a components. Now, this particular financials are also provided by management. Identification of components, again, prime responsibility, it is management, but we have to verify as an auditor. So as an auditor, we will be verifying this.
Excuse me, sir.
Yes.
Sir, your screen is not visible to me. Now visible, sir. Thank you.
So basically you can say that, when it comes to the group audit, we will be doing all these stuff: identification of components, obtaining financials, consolidated adjustment, audit of CFS, then after adjustments, and then reporting. Clear with this? Any doubt till now? Any doubt? Okay. If no doubt, let's proceed ahead. Now, when I talk about consolidated financial statements, what do you think it will include? Let's say it's only consolidated balance sheet, or what consolidated financial statement includes? Can anyone tell me?
Sir, it includes consolidated balance sheets, consolidated profit and loss account also, and consolidated cash flow statement also, and the consolidated some part of notes to account where wherever it is appropriate, it will include.
Absolutely correct. So they are the full set of financial statements. The way or the concept that we adopt for the audit of financial statement, general purpose financial statement, we have to use the same concept. So whatever points I will be discussing is not something new. I will not be discussing something, some different concept altogether that we have understood till now. No, I will be discussing the same concept, but again, we will be tweaking those concepts by considering the scenario of a consolidated financial statement. Okay, so everything will be same, but only the point here will be that we will be tweaking the scenario. Now, for example, when you are going to audit, let's say you are principal auditor. I hope you have already attended the lecture for the SA 600, where we have discussed in detail the responsibility of the principal auditor. Okay, let's assume you are the principal auditor. What was the prime responsibility of the principal auditor that we discussed when we discussed that, okay, before becoming principal auditor you have to do this? What was that? Anyone? What was the prime responsibility of the principal auditor before being a principal auditor? Like let's say tomorrow, if he wants to be a principal auditor, what are the things that he needs to verify? Quick revision of SE 600. Come on, guys. No? Yes, no? Anyone? I think you guys have not gone through the lecture or either not paid attention to that. Okay, no issues. So, when it comes to the responsibility or being the principal auditor in case of a CFS, okay, in case of the group audits, principal auditor has to consider few things before accepting as a principal auditor or before starting to participate as a principal auditor. And number one, that is the materiality portion of the financial statements which the principal auditor is going to audit. Materiality portion. Number two, principal auditor's degree of knowledge. Number three, risk of material misstatement in financial information that is audited by components. So risk of material misstatement in FS of components. And number four, performance of additional procedure. That how much additional procedures the component auditor has to perform for the purpose of principal auditor. Now, based on all these things, principal auditor has to decide whether he can accept his participation or whether he can act as a principal auditor or not. Yes or no?
Yes, sir. Now you know.
So these were the four important points that we discussed.
Yes, sir.
Now, once you identify yourself as a principal auditor, you identify yourself as a, let's say, you are the principal auditor. Now you decided everything. These are the component auditor. Everything is fine. What is the first step that you do? Now let's talk practically. Tomorrow you are being appointed as an auditor of, let's say, okay, XYZ and company, XYZ and limited. It has 4 subsidiaries, all different auditors. You are appointed as a principal auditor. What will be your step with respect to the group audit? Tell me. What you will do? Come on, like, okay, tomorrow you are being appointed as a principal auditor. What will be your first step? Don't say me acceptance and everything. Let's say you have done all that stuff. You have complied with the acceptance, CNA procedures. You are complied with the ethical requirements, independence requirement, everything that is done. Okay, SA 200 complied, SA 210, 220 complied. Fine. Now what is the next step? Visit and examine books of accounts of subsidiary. Okay. Directly you will visiting all the 4 subsidiaries. Identify the area which requires special consideration. How will you identify that? So number one, let's say someone told me that we will visit the subsidiary to examine books of accounts. Out of these 4 subsidiaries, 2 are in India, 2 are Indian subsidiaries, and rest of the 2 are, let's say, foreign subsidiaries. Okay. Now tell me, how will you visit? Let's say out of these 2, one is in far west and one is far east. Somewhere in the far east of the world and another in far west of the world. You are saying, Sania, that we require special consideration, identify areas which require special consideration based on materiality. Am I required to consider only materiality to identify identify areas that require special consideration?
So can you ask again the question?
Okay, so the answer that was given is that identify areas. The first thing they will do is identify areas which require special consideration based on materiality. Now, my question is only whether I will consider only materiality or other factors also, or is this will be my first step, identification of areas. Yes, no, anyone, based on other factors also. Okay, but what will be my first step? What will be my first step? Anyone? This will not be my first step, sorry. Once I decide to act as a principal auditor, this will not be my first step. My first step will be, yes,
We will first
yes,
try to understand the entity and its nature and size.
yes, okay, yes, good, kind of, yes, we can do that. But before I, do anything of such thing with respect to the entity, my responsibility is also towards the auditors, the other auditors. So I'm talking about, as of now, all the different auditors over here, all the auditors which are there. In case of a group audit, that is the thing that we need to understand. Now we are not only talking about the XYZ Limited. No, that is there. We will understand the entity. We will do all the procedures that we understand and that we have decided in essay. Fine. But I'm talking about now these auditors. These auditors, basically, here we have to coordinate. Remember, essay 600.
Ye-
That when I'm going to use the work of another auditor, I has to make sure certain things first of all. Yes or no?
Yes, sir.
So before I, start anything, before I, after consideration of my particular part as a principal auditor, I need to make sure that I am doing all the required things that I'm required to do as a principal auditor. For example, when I'm planning to use the work of another auditor, as in principal auditor, I should consider the professional competency of the other auditor. Now, I specifically said that 2 foreign auditors are there, 2 foreign subsidiaries are there, means auditors will be outside India. Are you considering professional competencies of these other auditors? Number 2, what procedures they are going to perform on their components as an auditor. For example, outside India, let's say there is no requirement of audit. They are going to only perform review. Now you understand what is review. Is it sufficient for me? Yes or no?
Yes, sir.
So what you will do to ensure that these kind of situations doesn't arise, as in, let's say, principal auditor, what will be your first step that to ensure that you are also asking them what is the procedures they perform, or whether they are complied with or not? What do you do? Will you go to each and every auditor and have a discussion? Okay, in that case, I'll tell you, don't worry. In this case, there is a specific thing that comes into the picture, a specific document, you can say. Like, you might have not heard this kind of thing earlier, but I'll tell you what practically goes into the picture. This is known as a group instructions, group audit instructions. These group audit instructions are issued by principal auditor, usually. Now, these group audit instructions require certain things that the component auditor has to, first of all, like how the audit will go on. This is a very detailed document which includes that, okay, at the start of the audit, what is the responsibility of the component auditor, how they need to ensure or how they need to communicate back their professional competency, what principal auditor is expecting with respect to the professional competency. Number two, how they need to provide, in which format, in which way they need to provide back the answer with respect to what procedures they are going to perform on the component, what materiality level they are going to take for the component. So the detailed audit procedures, the detailed audit plan may be in a different format, the way principal auditor requires. Okay, he will send group audit instructions. This is a group audit instructions. This contain, okay, please, provide us that these are the what procedures you are going to perform with respect to your subsidiary or the component in this format. Means, let's say it may contain, area by area, that, okay, what, let's say one particular area is there, and what area by area list is might be there. There might be risk of material misstatement area by area. Each risk of material misstatement be there, audit procedures may be there. So there might be multiple things in that, and based on that, the principal auditor will decide whether the work of another auditor is adequate for his purpose or not. Are you getting the point?
Sir, can you explain this once again?
Not, why not? So this is a kind of a document. Okay, when I say group audits instructions, now if you remember in XA 600, okay, when planning to use work of another auditor, the principal auditor is required to evaluate the professional competency of the other auditor if the other auditor is not a member of Institute of Chartered Accountants of India. Yes
Yes,
or no?
sir. Yes, sir.
Now, I cannot go to each and every auditor. I cannot, ask him the questions. What I will do is I'll prepare a questionnaire. I will ask each and every component auditor, fill this questionnaire and give it back to me.
Yes, sir.
Similar way, what is the another responsibility in SA 600 is that principal auditor should perform procedures to obtain sufficient and appropriate audit evidence that the work of other auditor is adequate for his purpose. That means he has to ensure that the audit which is performed by the component auditor is sufficient on that component, and no any other additional procedures are required to be performed. In simple terms, I talk about, let's say there is one component outside India. Okay, and the local law says that during audit, you can only perform inquiry and analytical procedures. And once you perform an inquiry and analytical procedures, on the basis of that, you can issue audit report. Now, will you take that as an audit report or will you take that as a review report? Okay, I will again, discuss with example. Now, let's say for this Far East entity, local law says that in audit, perform only inquiry / analytical procedures. Now, after audit, this report is given to you for consolidation. Okay. Now, let's say this particular Far West subsidiary is, let's say, contributing 30% of revenue. It's a material subsidiary. Now, once you will receive this report for consolidation, my question is this sufficient for you? Is this sufficient for you? Is this report enough for you to consolidate the financial statements? Yes, no,
No, sir.
absolutely.
No.
Now tell me, if this is not sufficient, then what you will do?
We will require further information uh, from the component auditors. Hello.
Further information as in,
Uh,
you would ask him that, okay, apart from inquiry and analytical procedure, please add the inspection, please add the observation procedure,
Provisions, recomputation.
recalculation.
Yes, sir.
Okay,
Yes,
I
sir.
will ask, okay, no, I need to provide, because at the end your target is to issue reasonable assurance. Based on the inquiry and analytical procedures, I cannot issue reasonable assurance. Sorry, that will be limited assurance for me. So, to provide reasonable assurance, I should get reasonable assurance. If that is a material subsidiary, I need to say to the component auditor, please perform these procedures, perform the audit, based on the and acceptable standards, and then give me the report. Are you
Yes.
getting the point?
Yes, sir.
So where it is written, so you do not, communicate over the call, you do not communicate over the emails, but all these communication has to happen at the start of the audit. You cannot go to the component auditor after completion of the audit. No. Now you do the rework. That is not the way.
Yes, sir.
So all these things are listed in the group audit instructions. What is the standards that you require them to follow? Or let's say, for example, sometimes we ask them, okay, which set of auditing standards you are following? Whether you are following ISA, International Auditing Standards on Auditing, or you are following some other local. Then at times we have to perform the gap assessment between, both of the standards. Let's say they are following the local law, local standards. So sometimes we are required to perform local, gap assessment between the local standards and the international standards, or the Indian standards, which are the areas where the local standards lacks, that we need an assurance. If we identify something, then we have to specifically say them, no, these are the additional things that you need to do. So all those things are combined in one set of documents that is known as the group audit instructions. and that is given to the component auditors.
Clear, sir.
Great. So on the basis of that, professional competency, adequacy of the work, okay, then advising the other auditors that how their work will be used and in which format they need the work. Sometimes over and above audit report, principal auditors ask component auditors to report some specific areas, okay, some specific matters that might not be a modification, but that requires attention from the principal auditor. Kind of a key audit matter, but something different, based on their requirement. It can be anything. Or, sometimes even when, group, what, principal auditor says that, okay, fine. If the modification or if the misstatement is not material, perfectly fine. You shouldn't modify your report. But give me the list of each and every misstatement, irrespective of the materiality, so that I can see where the misstatement is. If I need to perform some additional procedures, then I myself will perform, or I will ask you to perform based on my experience. So sometimes they obtain the report. Okay. Usually, I'm not sure any one of you have heard or not, but these reports are known as sum and said reports.
Not
Now,
heard.
sum is your summary of uncorrected misstatement, and said is nothing but summary of adjusted differences. These are some terminologies which are actually used in practical life when it, in the case of group audits. Now, these are misstatements which are uncorrected, irrespective of the amount. Okay. And sometimes this is referred to, what do you say? They are, kind of below materiality level or apart from modification. So you can say this is other than modification. Okay. And adjusted difference is, okay, you identified misstatement, but that has been rectified now. So that difference has been rectified, but a list of such differences that, is required, at times, required by the principal auditor. Okay. Now, very good question. If the local laws only require inquiry and analytical procedures, what if the component does not let the component auditor to perform inspection and observation? Means the report that you have received is of limited assurance. Now you cannot perform any other procedure on that component, and that component is a material component. What you will do? Anyone? Okay. You asked him to perform inspection observation. Component is not allowing them to, subsidiary is not allowing them to perform these procedures because local law doesn't require. What you will do? Means at the end you are not getting the report or the reasonable assurance report that you require to issue an opinion on the consolidated financial statement. You are not getting the information that you were expecting. What you will do?
Then it will lead to a disclaimer of opinion, as we did not get the information. We are not able to collect the sufficient appropriate audit evidence.
Absolutely correct. Yes. Either I will issue a modified opinion or I will issue disclaimer of opinion because I'm not being allowed to look into that. So, Sanya, in this case, either issue modified opinion, or it's a, if the limitation on scope, you cannot do anything, every door is closed, modified or disclaimer of opinion based on the materiality levels and pervasiveness. Clear?
Clear, sir.
Okay. So this is how practically on ground things happen. So when you will actually perform group audits, you might hear the terms group audit instructions. Some said, now you might understand, okay, what are these things? What are these documents? Okay. So that was introduction of the first part, group audits. Now, coming to the next point, legal framework. Can anyone tell me the section under which a company is required to prepare consolidated financial statements? Anyone? How many of you read the Companies Act? Okay, Manish, very good. Yes. Yes, Ginny, very good. If I ask you to be more specific, in that case, if I talk about the legal framework and more specific area, it comes that section 129, 3 and 4. Okay. Section 129, 3 and 4 are the two sections, subsections basically, which talks about, consolidated financial statement and its requirement. 129(3) says that where a company has one or more subsidiaries, including associate companies, joint ventures, then the company is required to prepare consolidated financial statement. Okay, in the same form. 129(4) says that the provisions which are applicable to the preparation, adoption, audit of the financial statement of standalone financial statement will apply in a similar way to the consolidated financial statements. Means the way board is required to adopt, the way the management is required to prepare standalone financial statements, they have to prepare, they have to adopt consolidated financial statement. The way it is, the company is required to get the standalone financial statements audited, books of accounts audited, they are in a similar way required to get audited consolidated financial statement. That is 129(4). Okay. And there is one form that the company is required to file for silent features of the financial statement of its subsidiaries. Can anyone tell me which form it is? Quickly. Which form it is? Under which the company is required to file about the silent features of the subsidiaries. Come on, guys, quickly. Very good, Jenny. Yes, it is AOC 1. Okay. AOC 1 is a form which the company is required to file. Now I'll write it over here for your reference. AOC 1. Okay. Now these are some of the legal requirements that is applicable with respect to the consolidated financial statement. Apart from that, there is one important aspect with respect to the legal requirement. Okay. Now we will come to that. That is your company's account rules. Sorry. (2014). Okay. Basically, what is the requirement under Companies Account Rules 2014? And to be precise, your rule number 6. Rule 6. Can anyone tell me what is the requirement of Rule 6 of these rules? If you guys have gone through, you might be aware. Simple. Come on, quickly. Requirement of Rule 6 of Companies Accounts Rule 2014. It is related to consolidation financial statements. I'm telling you. Yes, okay. Very good. Very good, Manish. Very good, Sanya. So, Rule 6 says that the manner of consolidation of accounts. So, Rule 6 says that the consolidated financial statement of the company shall be prepared as per the provisions of Schedule 3. Okay. So, CFS should be as per Schedule 3. Fine. Okay. Now, apart from that, there is one important point that is provided in Rule 6. Now, Rule 6 talks about a specific category of companies which are not required to prepare financial statements. In that case, if they comply with the requirement, okay, which is there in the Schedule 3 with respect to CFS, then it will be, what is the scenario is, like, let's say, for example, there are companies which are not required to prepare consolidated financial statement. There is a specific, requirement in the Schedule 3 with respect to the consolidation. If the company complies with the provision provided in that Schedule 3, then it will be, fine for them. They don't have to prepare all the consolidated financial statements. Okay. So there's a specific requirement. I'll come on to that particular point in a minute. Now, before we go to that particular point, we need to understand which are the companies which are not required to prepare consolidated financial statements. So we will understand companies that are not required to prepare consolidated financial statements. Can anyone tell me the companies that are not required to prepare consolidated financial statements?
Sir, if there is, hello,
Yes, yes.
sir, if there is a company which is a wholly owned subsidiary company of the holding company, then it is not required. No, then uh, then it is not required to prepare CFS.
Mhm.
And if it is a partially owned subsidiary company, then it also required to take permission from the NCI. And
Okay.
it should not be a listed company,
Mhm.
and it should not be in the process of listed company.
Yes.
And the parent company uh, the parent company
Mhm.
should prepare the consolidated financial statement as per the Ind AS for the public use.
Okay, very good. Yes. Basically, if I had to summarize this particular point, okay, so there are two type of exemptions that we will discuss about the companies that are not required to prepare consolidated financial statement. One is a Rule 6 based exemption. Second is your Ind AS based exemption. We'll come to that. Okay. So Rule 6 based exemption, what it says that? Rule 6 based exemption says that uh, preparation of the consolidated financial statement, is not required as per the Schedule 3 if by a company, if they comply with the three conditions. Okay. If the company comply with three conditions, then they are not required to prepare CFS. Now, which are these three conditions? Okay, so I call it as an exemption under Rule 6. So the three conditions are: number one, if it is if the company, okay, it's a wholly owned subsidiary, or it's a partially owned subsidiary of another company, and all its members which are there in the company, including those which are not entitled to vote. In some cases, there are certain members have been intimidated in writing that the company has informed them in writing, which for which they have a proof of delivery, that I'm not just saying that okay, I have called them and let them know okay that okay, we are not preparing consolidated. No, no, no. In after informing, there should be a proof of delivery that okay, this is the intimation that was given to them, and it should be that they are not objecting to the company for not presentation of the consolidated financial statement. So basically, subsidiary, whether wholly owned or partial, all members are intimated that okay, we are not going to prepare CFS, and they no one is objecting on that. So first condition is all members are intimated. Second condition, it is a company, okay, which is not listed or is not in process of getting listed. So securities are not listed or in process of not getting listed. So means they are not going for listing as of now. Third, it's ultimate or any intermediate holding company, not ultimate, but someone intermediate, which is in India or which is required. That intermediate or ultimate holding company files consolidated financial statement with the registrar, which are in compliance with the applicable accounting standards. So the third condition basically is that someone else is preparing your consolidated financial statement. Means some other company is there in which you are getting consolidated. So ultimate or intermediate, okay, holding is preparing CFS. Sorry. Okay. Now, in this case, if these three conditions are met, enjoy the exemption. So if you have, complied with all these three conditions, you can enjoy the exemption. Clear with this? Any doubt?
Sir, in this sort of a company, aren't they given a choice that if they don't want, then they might not prepare the consolidated financial statements?
Uh, Choice in the sense means this particular one, this is a choice they have.
Sir, okay, sir.
So basically, the companies, they have the choice. If someone, let's say, member tomorrow, they object, choice is one. You have to prepare. So this is an option or exemption which they can, uh, you know, uh, what you can say, use. It's upon them to use.
That's exactly what I was asking.
Yep. And number two is all the conditions over here that we are referring. Okay, these are required to be checked together. I will not check only any one condition. No, all the three conditions should be satisfied. Then only I can get the exemption. Otherwise, I will not get the exemption. That is the first level of exemption I'm talking about. There is one more exemption. Can anyone tell me where it is?
With regards to investment companies,
And it is relevant, and it is related to means included in which particular area where it is included. So
so
if
for
you are saying,
investment companies,
no, please continue.
so for investment companies which have a subsidiary which is an investment company, they don't have to prepare CFS.
But where it is written?
I don't know. I think para 4B, read with section 32.
4B of, yes, you are right. 4B of, yes, Manish, very good. Okay, I'll tell you. Yes, Ginny, very good. So that is there in your Ind AS 110. See, now, initially we were talking about Rule 6. Rule 6 was saying that, okay, prepare as per Schedule 3. But if the company is not required to prepare as per Schedule 3, okay, or, company which is not required to prepare CFS, then they need to basically, comply with the minimum requirements. So I'll just pull it down this particular areas. I can explain you how it is working and why we are now referring to Ind AS 110. Basically, your Rule 6 was talking about preparation of CFS as per Schedule 6. And it was saying that there is a provision to this particular rule. The provision says that this particular company, if the company is not required, okay, the company is not required to prepare CFS, then they can only meet requirements, minimum requirements of Schedule 3. So company who are exempt, basically, the term is the companies which are covered under section 3 or subsection 3 of 129, but which are not required to prepare, kind of exempt, okay, who are exempt from preparing CFS. They have to, who are exempt from preparing CFS under accounting standards, under AS. In that case, it shall be sufficient that they should comply minimum requirements. Comply minimum requirements. So this particular provision talks about AS. So we have to see what is the exemption under AS for this. Okay, we have to look for that. Now, second provision basically to this particular rule is this one, which says that in this particular, whatever is written in this particular rule will not apply. Okay, will not apply to the company who is meeting the requirement. This is like these three requirements. Means companies are not required to prepare consolidated financial statement if they meet these three requirements. So there are two exemptions, one under AS, one under your second provision of Rule 6. Okay, so now we understood the second provision. Now it's time to understand the exemption under AS, and that is basically we will refer to Ind AS 110, the second exemption that I was talking about. Now, what is Ind AS 110 says? So, Ind AS 110 basically talks about consolidation of a financial statement, consolidated financial statement. Okay. Now, Ind AS 110, there are two basically paragraphs, 4 and 4b. Okay. 4 talks about that an entity that is a parent shall prepare consolidated financial statement except when there are certain conditions met. So first exemption is under para 4. So prepare CFS except if you meet these 3 conditions. Sorry, 4 conditions. One, it's a wholly owned subsidiary or partially owned subsidiary of another entity, and all its owners, including those otherwise not entitled to vote, have been informed and they do not object to the parent not presenting CFS. The same thing that we understood over here. Okay, all members are intimated and they do not object. Fine. Do not object. Number 2, second condition, it's debt or equity instruments are not traded in public market, a domestic or foreign stock exchange, or over the counter market, including local or regional markets. Now, see, when we were referring to Rule 6, what was the term over there? It was used is the company whose securities are not listed or are not in process of listing on any stock exchange, whether in India, outside in India. But when you refer to Ind AS, it specifically says that debt or equity instruments. Companies Act use the term securities, but here the term is used debt or equity instruments. So there is a difference between both. Okay, traded in the public market, domestic or foreign exchange, or over the counter OTC markets, including local or regional markets. So the way it is defined, it is different than the way it is defined in the Companies Act. You can have some examples or some cases which might fall under the case of exemption of Companies Act, but not here, because over there the term security is used, which is a wider in sense. Here the debt and equity instruments are used, which is a narrower in sense. So there could be some near escape scenarios which might not fall under the Ind AS 110 but get an exemption over there. So I will again, but as of now I will again write debt equity not listed. Third condition, did not file if the company, the parent company did not file or nor in the process of filing financial statements with the Security Commission or other regulatory organization for the purpose of issuing any class of instruments in public market. Means again not in process of listing. Fourth condition, its ultimate or any intermediary parent is going to produce financial statements that are available for public use, which comply with Ind AS, in which subsidiaries are consolidated and measure or are measured at the fair value through profit and loss account. So again, your ultimate or intermediate holding is preparing consolidated financial statement as per Ind AS. Now, over there in Companies Act, when we were talking about Rule 6, we were talking about that, the company or the ultimate or the intermediary holding company files consolidated financial statement with registrar, which are in compliance with applicable accounting standards, not only Ind AS, but accounting standards, which can be any. Okay. And they are filing with the registrar. That was the requirement. So there's a slight difference between both of the things. Although it may sound similar, there is a slight difference between both. Okay, that was the para 4 exemption. Now coming to next exemption, which is given in para 4b, which talks about that if the parent is an investment entity, then it is not required to present CFS in accordance with para 31. Para 31 describes like how to present CFS, but if that is a investment entity, if parent is investment entity, then not required to, in simple terms, not required to present CFS. So these are the two things which are covered under your Ind AS 110. Okay, para 4 and 4b, two kind of things. Now, if the entity falls under any of the scenario over here, they will be counted as an exempted under this first proviso. First proviso of Rule 6, and they have to comply with the minimum requirements of Schedule 3. No need to prepare CFS. Otherwise, they can apply for exemption under second proviso. Clear with this? Any doubt?
Sir, could you give the example of the companies which are, say, suppose covered under Ind AS and not covered under, not allowed to prepare CFS under Companies Act?
Companies which are, sorry.
So you just said no, securities and not listed company, and in the other one it's written public debt. So and you said it can be covered in one and not the other. So could you give an example of the same?
It could be a very narrow case. See, I'm not saying that every time you will get a one specific case, but it is a very, very, very specific and narrow case can be there. If you want to construct, then can be there. But otherwise, if you see, there will be hardly any company which is getting exemption under one but not getting another.
Okay, sir.
Because see, there is only the change here is only in the certain terminologies. That's it. Now, let's say for example, companies whose securities are not listed, most of the companies go for listing of equity or debt. There are other classes of securities also, but they don't go for the listing of those securities. Hardly any company goes. And that company also already has their equity or debt securities listed. So, there will be hardly any scenario where, I would say, okay, this is falling under the, exemption under second provision, but not getting exemption under Ind AS. Okay. Any doubt with this? Any doubt? Now, can anyone tell me what is an investment entity? Like I discussed investment entity, but no one told me, we did not discuss what is an investment entity.
Excuse me, sir.
Yes.
Sir, I have one doubt.
Hmm.
You have told about the first proviso and second proviso, and
Yes.
in both the provisions, the only difference is the related to Ind AS and Companies Act, because the all points are similar. Is it?
No. In second proviso, yes. You can say that this is similar to para 4. This
Yes, sir.
particular
Yes.
point
Para
is
4.
similar to para 4
Yes, sir.
of Ind AS. But there is one more para under Ind AS, that is 4b.
Okay.
Now we need to discuss this. What is an investment entity? Come on, please. Anyone? What is an investment entity?
So an investment entity is a financial institution that pools money from people and invests in various securities.
Okay. Yes. Very good. But if you have to define the way it is being defined, okay, under the Act, how would you define, or under the Ind AS? Okay. Yes, Manish. Good. I will. Your answer is there. I'll come to that point in a minute. On this particular topic also. But as of now, I think Sania, the way you mentioned investment entity. Yes, investment entity basically talks about obtaining funds from investors, okay, or providing investment management services to those investors, and then on the basis of that particular funds they invest somewhere solely for the purpose of getting returns from the capital appreciation or kind of investment income which may be dividend, okay. So their purpose is not to any other other thing but other than the return from the capital appreciation investment income only, and they measure the performance of the substantial of its investment at the fair value. So they are measuring the performance of the subsidiaries or their investment at the fair value. So these three conditions are given under Ind AS 10110. If these three conditions are satisfied, then I can call that entity as a investment entity. Okay. So for that, you need to refer to Ind AS 110 para 31. Now, to link this with the upcoming chapter, your investment entity. How many of you have heard about CIC? Anyone who has heard about in CIC? And what are CICs? I will again discuss in the next chapter also, but I'm giving you a hint also. What is CIC? No? No, Sani? Come on, quickly. CIC. No, no, Ginny. Not a government related company. Okay. CIC, I'll tell you, are known as or are basically core investment companies. These are a type of NBFC. Okay, we will see NBFC in the next chapter. Okay, these are the NBFCs, core investment companies. Their primary purpose is to perform investment in shares and securities. Like they should have hold 90% of its asset in form of equity, preference share, bonds, and everything. Okay, so there are RBI regulations 2016 or directions also on that, which are applicable to CICs. But again, just giving you an example, when I talk about investment company, it could be a CIC also. Okay, we will see what is CIC in the next chapter. But you can, as of now, have here. It can be CIC. Be a core investment company. Okay. Now coming back to your point, like okay, we understood the exemption and why we were required to understand the exemption. Like we understood, okay, these are the exemption, companies are not required to prepare CFS, then why we are discussing this particular point in this particular chapter? If these companies are not required to prepare, then we have to, like, why we are discussing about them? We should discuss about the companies which are required to prepare. Okay, you might have that question. Now, the reason why I'm discussing this particular topic is that you should be aware when a company is required to prepare CFS or when a company is not required to CFS. You should be aware about the requirements, then only you can perform the audit. Tomorrow, if it's an investment company, okay, and you ask the company, okay, give me consolidated financial statement, not good on your part, you are not updated. So that's why it's necessary for us to understand which companies are required to prepare CFS and which companies are not required to prepare CFS. Clear with this? Yes or no?
Yes, sir.
Good. Therefore, when the CFS is applicable, okay, now I discussed about the legal framework. Okay, we discussed about the legal framework. So once we understood the group audit, we now understood the legal framework. Now the next part, once we decide, okay, the company is required to prepare CFS, no exemption is available, nothing is doing, they have to prepare CFS. The foremost and the important thing that we need to understand is the responsibilities of the auditor and objectives of the auditor. So we will now discuss about auditor's objective with respect to the consolidated financial statement. In an audit of consolidated financial statement, because now we are at the point where we have decided that, okay, company has to prepare CFS, the provisions are applicable, and company, let's say if you come to a conclusion where company is required to prepare, then okay, definitely company will also have the same conclusion. In that case, you need to understand what are auditor's objective with respect to CFS. Quickly, I would expect answers from you guys on this. What are the objectives of an auditor in case of an audit of a CFS? Come on, guys. Objectives of auditor with respect to the CFS. Uh, okay, Jenny. Okay, Manish. Yes, very good, Sanya. Anyone else? Anyone? No? Okay. So I can classify the requirements into 4 to 5 sections, 5 points. Okay, 4 to 5 points. Number 1, auditor has to satisfy himself that the financial statement. Okay, now here we will talk about consolidated financial statements. So he has to satisfy himself that the CFS are prepared in accordance with requirements of very simple and multiple times discussed upon applicable financial reporting framework. Means whether they are complied with the rule 6 or not, or schedule 3 or not. Number 2, When I say applicable financial reporting framework, it will not only include your Rule 6, but it may include your Ind AS or AS 110, or the corresponding AS if that is applicable. So Rule 6, Ind AS, or any other requirement that is applicable to that particular company. Yes, Manish, AS 21. Second, to enable himself to express an opinion. Okay, so here he has to enable himself to express an opinion on these consolidated financial statement, that that the consolidated financial statement represents or provides true and fair view. Okay, so he has to express an opinion on the true and fairness or true and fair view of CFS, or true and fair view presented by CFS. Okay, third very important point, to inquire into the matters specified in 143(1). So to inquire as per section 143(1). Now, can anyone tell me why this requirement is coming? 143(1). Why we are following 143(1) over here again? Anyone? Why we are again following 143(1) over here? But why we are required to comply with this provision? Why we have to comply with 143(1)? We understood, okay, we are required to, companies required to CFS, we have to audit the CFS. But why to inquire on the matters that are specified in 143(1)? So these are the additional procedures that you are required to perform, or maybe you can say special inquiries. So inquiries into the matters as specified under 143(1). Why we are required to do this in special inquiries? Yes, Manish, it is a duty of auditor, absolutely correct, but where it is written? Just because I have written, you have to do? No, there should be somewhere. Reference should be coming from some particular point where it is written. Come on, guys. Sir, it is written in the book. No. You should be able to understand that from where which requirement is coming. Just it is written, we are reading and it is done. No, it shouldn't work like that way. Division 2 Companies Act. Schedule 3 Division 2. But that is a requirement of the format of preparation of the financial statements in case of an Ind AS. Come on, guys. Okay, I will give you the time to think. Meanwhile, I'll proceed. Okay, again, to report on matters as specified under 143 3. You need to think why we are going to 141 and 143. Meanwhile, you keep your thinking process, continue. Okay. And one important point that we need to refer to is that also we need to validate the requirement of preparation of CFS. Means we need to make sure that they have to prepare this. They are preparing the CFS. What do you say? In a way that is required. Okay, so these are the 4 important points you can say with respect to the objectives of the auditor. Clear? No, Manish. 700 is something different. SA 700 never says that go to 143.1. Any doubt, guys? Apart from my question that I have given to you? No? No doubts? Okay.
तो दिमाग में आपका क्वेश्चन ही चल
Okay. I'll tell you the answer. Let's close this suspense and let me tell you the answer. See, we discussed one important section at the start. Okay, you forgot that section. That is 129.4, which says that the requirements of preparation, adoption, and audit of the financial statement of standalone will apply as it is to the holding also. So the audit requirements of the standalone financial statements include requirements to do inquiries as per 143.1, to report on matters specified under 143.3. Then by the virtue of 129.4, the same is applicable to a whole, audit of a consolidated financial statement. Now we have to do the inquiries, we have to report on 143.3, we have to inquire on 143.1 because of section 129.4. Are you getting the point? Because of this particular section, we have to go to 143.1, we have to go to 143.3. Not only that, 139, 140, all these things are again applicable. 141, because whatever requirements you were complying with when it was the audit of the standalone financial statement, the same requirements in the similar way you have to comply with in the case of audit of a consolidated financial statements. So in that case, I would say, the whole particular chapter with respect to the audit is applicable. So the chapter 10, Audit and Auditors of Companies Act, which covers section 139 to 148, okay, will be, applicable for the consolidated financial statements also. Clear?
यस सर, एक्चुअली चैप्टर के अंदर तो सोचा ही दिमाग में बाकी सब एक्ट्स वगैरह सब कुछ आ रहा था, लेकिन ये तो सोचा ही नहीं कि उसके अंदर भी देख ले.
Yes. Everything is given in your study material. There's nothing, beyond study material.
Yes sir.
The thing is, you need to see it from a view like, okay, there are multiple things that we need to understand why we are doing this. See, just because it is written, that's why we are learning things. No, you should also ask the question why we have to comply 143.1. Why do we have to comply 143.3?
Yes sir.
Then only you will be able to remember these things.
It will also establish the linkage between 1.2 with the another.
Yes.
Yes sir.
Any further doubts? No? Okay. If no further doubts, then let's take a 10 minutes break. After the break, we'll continue the session and we'll discuss the rest of the points. Now we discussed about the responsibilities of the auditor. The next point we need to discuss is about the audit procedures and consideration. which is a very good point. Audit considerations, auditing the consolidations, and some things that auditor as in group auditor is required to think of. So let's take a quick 10-minute break. Yes. Guys, let's continue the session. Okay, now we will talk about procedures and considerations with respect to the audit of consolidated financial statement. So we'll talk about some audit considerations. Okay, so when it comes to the audit of a consolidated financial statement and let's say audit considerations, what do you think are the considerations or what do you think are the areas that auditor has to look for, or auditor has to think of when he is doing the audit of a consolidated financial statements? So which are those specific points which I can say that okay, the auditor has to look for when he is doing the audit of a consolidated financial statements? Come on, guys. Which are those things? So let's say tomorrow you have to start the audit. What you will do first? Like, after understanding the legal framework, after sending the, after having the accepting as a, principal auditor, after deciding, okay, I'm going to send group audit instructions with respect to professional competency, what else you will do? Anyone? No? I have written over here. It's already written on the screen. This is the things that you are required to consider. We will discuss these points only now. So we will discuss first an important point is identification of the components. That as a principal auditor, as a auditor of a main your parent entity, the auditor has to understand what are the components that are required to be consolidated. You should have a list of components, okay, that are required to be consolidated for the purpose of your consolidated financial statements. You need to identify these components. Now, if I go to requirements and audit considerations, the first and important and the foremost point that I will talk about is identification of your components, okay, that is required to be consolidated, and the financial information of those components. Okay, so first thing is you need to identify the components, and then you need to identify the financial information of those components. Then once you identify the components and the financial information of the components, then you need to go to the next step. Okay, then you will take a next step, that you will identify related party transactions and related parties. So once you identify components, based on these components, you need to identify related parties and related party transaction. Okay, why we are doing this? Why we are identifying related party transactions? Anyone? Why we are identifying related party transactions? Anyone quickly? Because they pose greater risk. Yes. Anything else? Of okay, greater risk, one area. Anything else other than the greater risk area? No? Okay. Now, once you identify the consolidated financial, to prepare the consolidated financial statements, you need to identify related party transactions. Then only you will be able to understand about the intergroup or inter-entity, adjustment, inter-entity transactions that require elimination at the time of consolidation. So we will come back to these transactions when we will discuss intergroup elimination or inter-entity, or you can say intercompany eliminations. Intercompany eliminations. Okay, I would provide a reference as of now that we will come back to this particular point. So that's why we need related party transactions. There are other requirements also, but as of now, I'll just highlight this one. Intercompany eliminations. Okay, once you identify related party transactions, okay, then once you identify components and related party transactions, or even before identification of the related party transactions, there is one important point that we are required to do. The important point that we are required to do is that we need to first of all understand what will be the materiality, okay, for the group and for the components. So I need to calculate materiality for the group and components. Why I need to calculate materiality for the group? Can anyone tell me? Why I need materiality for the group, or why I need materiality for the components also? Let's say component will, the component auditor will calculate its own materiality by their own. Why I need to calculate materiality for them? Anyone? See, I am asking so many questions so that I can make the session interactive. And the more you will try, see, don't worry about wrong answer, right answers. The more you will try to answer, the more you will understand the concepts and how the things work on the ground level and the practical scenario also. So let's say I will calculate materiality for the group and components. It is written, but why to do that? No? No one? Okay. So the reason I basically calculate materiality for the group and component is two important things. Number one, the materiality for the group will give me a base or a materiality to understand permanent consolidation adjustments and temporary, or you can say current period consolidation adjustments. Now, permanent consolidation adjustments and current period consolidation adjustment, PCA and CPCA. Okay, now I will come on to that. These consolidation adjustment, basically, what are these adjustments? I'll come on to that. But materiality for the group will help me to understand whether the permanent consolidation adjustments, these are the permanent consolidation adjustments, whether these permanent consolidation adjustments are material, and if there is a misstatement in these permanent consolidation adjustments, whether that is a material misstatement or not. Similar way, if there is a current period consolidation adjustments, whether these adjustments are material, if yes, is there any material misstatement in these adjustments, then accordingly I will, that will impact my particularly opinion. Now, why I am required to compute materiality for the components? So the component materiality is considered or is calculated for two reasons. Number one, to identify whether component is material, to identify whether the component is material. Now, why I need to check whether the component is material? The reason, because that will decide if I am getting the information from the component or not. If I'm not getting the information from the component, will it be a misstatement for me, material misstatement? Whether I need to get some additional information. What is the portion of component with respect to the whole consolidated financial statement? That will somewhere again impact your risk assessment. Second point that is very, very important and that is relevant, that's why you can say that calculation materiality for the component is necessary to evaluate components misstatement. Now let's say for example the component auditor said, okay, no, for me 1 lakh rupees is material amount, so any misstatement that is beyond 1 lakh rupees is material misstatement and that requires modification. Okay, so we will discuss one example and we will see why we am saying materiality at the component level and the group level. Let's say you have one company that is a holding company. Okay, holding limited. This is a holding company. Now this company has subsidiaries. So sub limited is what subsidiary one. Okay, then sub private limited is the second subsidiary. Okay, then you have a, let's say sub PTE limited outside India, and you have a sub INC again outside India. Okay, now you have 4 subsidiaries to this particular company. Holding company's revenue, let's say its revenue is 200 crores. The sub limited, which is in India, okay, has a revenue of, let's say again 150 crores. Sub private limited has a revenue of 50 crores. Now sub PTE limited, again, which is outside India, and sub incorporation INC, which is again outside India. Now the revenue of sub PTE limited converted into INR, taking some exchange rate and everything, let's say it's 20 crores. And sub incorporation, which is newly incorporated company, just 2-3 years ago has been incorporated, its revenue is 5 crores, or let's say not 5 crores, it's too much, let's say it's 1 crore. Okay, now when the individual auditor of these entities will define materiality for them. Okay. Usually their materiality either will be based on their EBIT or their materiality will be based on their turnover. So they will take a benchmark to calculate the materiality. Hypothetical example, we are considering that, okay, let's say the materiality, the benchmark that is used for the materiality is your revenue, total revenue. Now, 1% of the total revenue was taken as a materiality. 1% of the total revenue was taken as the overall materiality. Now, in this case, 200 crores. So the overall materiality comes to the 1% of this 2 CR. Here, 1.5 CR. Here, it is only 0.5 CR. Okay, here 0.2 CR. And here it will be, it was 1 crore. So the materiality will be 1 lakh. Okay. Now, any amount which is more than 1 lakh rupees will be material for them. Let's say I prepared the consolidated financial statements. Based on this particular, arrangement, a consolidated financial statements were prepared. So, based on the consolidated financial statements of Holding Limited, okay, what will be the revenue now? Let's say there is no intercompany adjustment. We'll, for the sake of simplicity, we'll keep it simple. No intercompany adjustments, no elimination, nothing. So 200, 150, 350, 400, 420, 421. Total revenue 421 CR. Now, if I have to follow the same concepts of the materiality that, or the benchmark that I was following, so my materiality will come to 4.21 CR for the group. Now, let's say there was a misstatement over here. Misstatement was there, because of which there was a qualified opinion. Okay, so there was a qualified opinion. Okay, now because of this misstatement, there was a qualified opinion, and the misstatement was of rupees 5 lakhs. Here, now in this case, when I will prepare the consolidated financial statements, do you think this 5 lakh rupee misstatement will impact my this particular number, this particular materiality? Am I required to present this misstatement in the consolidated financial statements also? There is 5 lakh rupee misstatement. Yes or no? No. Okay. Yes, Sania, very good. No. Okay, Ginny, Sania. So we will not, because it's beyond, it's below materiality. Okay. Considering there is no any other, misstatement, this is beyond, this is below materiality. That's why we need group materiality and the component materiality, so that we can understand this particular misstatement, whether this misstatement in compared to your component materiality and group materiality, whether this is material or not. Let's say, for example, when I will allocate this, what happens as the next step? Once I calculate the group materiality, I need to allocate this materiality to each and every component. I need to allocate this materiality to each and every component. The reason, because on the basis of the allocated materiality, I need to compare the misstatement. So I usually sometimes don't compare directly with this one. What I do is I give this materiality sum to this, sum to this, sum to this, and sum to this. So let's say, for example, when I'm doing the allocation, what I'll do is, let's say out of 4.21, I will allocate 1 CR over here. I will allocate, let's say, remaining 3.21. I will allocate, some portion over here, some portion over here, some portion over here. And then their misstatement will be evaluated on the basis of the materiality that was allocated to them. That's why it's necessary to calculate materiality at the group level and the component level. Clear? Why we need materiality at the group level and the component level? Yes or no? Okay. To evaluate the components misstatement. Now, once you do that, once you evaluate the components misstatement, then
Sir.
yes.
Sir, in this example, you have divide the materiality among the 4 subsidiaries, but
Yes.
the subsidiary INC, if the materiality is it is the materiality for it is क्या बोलेंगे यानी इसके लिए वो एक
it will be a kind of a benchmark for that particular entity. Okay,
yes,
so that
yes sir.
anything beyond that benchmark will be, important for the group as a whole.
बट सर अगर यहाँ पे इसके मुझे वो प्रॉपर वर्ड नहीं मिल रहा है एक्चुअली.
So like what?
यानी ये कंपनी के लिए वो मटेरियलिटी बहुत बड़ी है, ऐसा
Yes,
अगर हम
yes.
कहें ये
So
बड़ी है, तो हम बाकी सारी की सारी जो कंपनीज हैं वो तो उनका वैसे भी जो टर्नओवर है वो थोड़ा रिलेटिवली ठीक है, लेकिन ये उनके लिए मटेरियलिटी इतना मैटर नहीं करता, लेकिन इसके लिए तो वो मैटर करेगा ना, 4th वन के लिए. तो क्या ये यानी इनवर्स इम्पैक्ट नहीं देगा बाकी सबके लिए, या फिर कुछ मिस हो जाए इस तरीके से अगर हम इसको मटेरियल ज्यादा मटेरियल नहीं माने तो?
no, it will not. I'll tell you why. See, the reason behind is, let's say at the end, my subsidiary, which is INC, okay,
Yes sir.
it has a total revenue of 1 CR. When I will consolidate out in the 421 CR, it is only 1 CR. See, everything is in proportion. I'm not saying it as a asset which is beyond everyone. I'm saying every component of this particular entity is small. Now, tomorrow, if I don't get, and there are scenarios where you don't get consolidated financial statement, where you don't get audit report on these standalone financial statements of subsidiary. There are real life scenarios.
Yes, sir.
At that point in time, I need to think of, okay, let's say in 421 CR, if I'm not going to get any amount of comfort on that 1 CR, am I getting comfort on 420 CR? If yes, if I'm getting sufficient and appropriate audit evidence on 420 CR out of 421, then I still can say, okay, I have got, on the majority of the portion, comfortness I have sufficient appropriate audit evidence. So on a reasonable basis, I'm saying it, I'm issuing opinion.
Okay, sir. Yes, sir. Yes, sir.
By, allocating higher amount of materiality will not impact to that particular entity. Rather, it will show that whether the entity is material or not for your consolidated financial statement.
Yes, sir. Clear, sir.
Any further doubts? Okay. If no doubts, then let's proceed. So we were talking about basically, the responsibilities of the auditor and with respect to audit consideration. So one was this particular area, materiality. Second was my, identification of related party transactions. Now, again, see, compliance with SA 600 will always be there. You have to comply SA 600. That is not a question anywhere. We have discussed SA 600. I'll not go again into SA 600 because, it will be a repetition of the topic. We have to comply with SA 600. Okay, that is not a question. But apart from that, Once I calculate this materiality for the group as a whole, then I allocate the materiality to a component. Now I need to think of PCA and CPCA, that is the permanent consolidation adjustments and current period consolidation adjustments. Because from this point, basically, I will be talking about auditing about the consolidation. Once I have the materiality, I will do the risk assessment. Once I have the materiality, I will now start doing the risk assessment. And for risk assessment, you already know that that you will understand the entity, you will understand accounting policies, all those things will come into picture. Yes or no? So once I will decide the materiality, now my things will start with respect to the audit procedures. That is, I will understand the entity, accounting policies, okay. Then I will understand group structure, then I will understand the nature, timing, and extent of audit procedures. Nature, timing, and extent of audit procedures of component auditors, because that is necessary for me to determine whether their work is adequate or not. Yes or no? I will consider the requirements of SA 600, other requirements like competency and all that stuff. I will be coordinating the work. So all these things I will do. There is one important point that I have not written over here, but I need to consider. Can someone tell me which is that point? Which is that aspect of the component financial statement that I have not written over here, but can be very important? Come on, quickly. Which is that point that you might think, okay, this is very important with respect to the components financial statement, which I have not written over here. Independence, it is part of SA 600. So I written SA 600, that is done. Come on, guys. What is that particular area? Whether component auditor is competent. Again, that is part of my SA 600, competency. So competency, I'll cover it over here. Written. I'll check the competency. There is one specific area of the component's financial statement. Forget about auditor. I'm talking about financial statement. I'm giving you a hint. And because of that, a lot of times, there are problems with respect to consolidation. And that is something linked to this particular two areas. Not two. Okay, I'll give you a specific hint. That is related to this particular one. CPCA, that is current period consolidated adjustments. Anyone? No? Other financial information point. As of now, that will not impact my current period consolidation adjustment, other financial information. Might not. But that's not the answer that I was looking for. Specific. That is not that much relevant here. Anyone? No? Okay, I'll tell you. Very important. Components. Accounting year. I'll tell you reason why. Outside India, it is not April to March. It can be calendar year. It can be October to September. It can be July to June. In that case, when you will receive a financial statement to consolidate, which are calendar year based for the consolidation, then you need to consider two financial years, one previous year, and that too you have to extract portions of March to December and the current year, Jan to March, you need to again extract. So, there are not many issues with respect to accounting year. Trust me. Accounting year, if that is a difference, very, very critical area, because it becomes very difficult to then consolidate. Now, why becomes difficult to consolidate is the opinion that is issued by the component auditor is on the different accounting year. In that case, complexity sometimes becomes such higher that partial information is audited and partial is not. Let's say accounting year of a company was getting closed at 31st December. I'll go to our examples again. If it is there, yeah. I'm not sure why it. Just give me a minute. Now, why it is taking time? Just give me a minute. I think there is some issue with respect to the file. Just sorry for the technical glitch. Okay. Now, I think some technical glitches there, but let's say this is CFS of holding. Okay. Now let's say, for example, this sub INC was having accounting year, okay, from your calendar year, Jan to March, then Jan to December. Okay. Now this is on Jan to December. Now, when the CFS of holding will be prepared, like here the accounting or financial year will be, let's say, your April to March. But when at the end of the March, or let's say in the month of April or May, when you will receive the financial statements of this particular company for this particular year, okay, so it will be only till December. It will not be beyond that, because their next year, that is again December to Jan to December, is yet to be closed. It is yet to be finalized. Audit is yet to get happen. So in the month of, let's say, if you are standing in the month of May or June, it is mid of their accounting year. How will you get audit report of that mid-year? Might not be possible. That's why it's very necessary to consider what is the, accounting year of the component. Accordingly, your group instructions will, consider some additional procedures that the component auditor might need to perform on the portion which is going out of their accounting year but coming into my accounting year. Clear with this? Yes or no? Okay, that's why I'm saying it is, yes, this is very simple, very straightforward thing, but a lot of times becomes, very, very critical area for the consolidated audit. Now, once you do that, once you decide all these things, then you are ready to proceed for the next step. Next step is doing the audit of PCA and CPCA. Okay, doing the audit of permanent consolidation adjustments and temporary consolidation, or you can say consolidation adjustments. Can anyone tell me which are the permanent consolidation adjustments? Permanent consolidation adjustment, quickly. Come on, guys. Permanent consolidation adjustment examples. What are the permanent consolidation adjustments? No? For example, determination of goodwill, determination of capital reserve. Okay, at the
Sir,
time of, yes.
can we consider the inter-group transaction as permanent
No,
adjustment?
no, that will not be permanent.
Okay.
I'll tell you what is the difference between permanent consolidation adjustment and current period consolidation adjustments.
Yes, sir.
Basically, when I talk about permanent consolidation adjustments, okay, these adjustments are defined or are calculated at the time of acquiring the what do you say control or equity or stake in the subsidiary. At the time, I will determine what is the goodwill, what is the capital reserve, what is the equity attributable to minority or non-controlling interest and all that stuff. And that calculation remains same for till the time you have that particular control. So non-controlling interest or minority will not change. The goodwill or capital reserve arising of the your what do you say acquisition, or your when you take the company, will not change. Okay, so these are going to remain same. So let's say, for example, when you do consolidation for the first time, at that point in time you determine what is the goodwill, what is the capital reserve, what is the non-controlling interest, and that will remain same throughout the year. So that's why they are known as permanent consolidation adjustments. Yes or no?
Yes, sir. Clear.
You have already seen consolidation accounting in FR.
Yes, sir. Yes.
At that time, you see how we determine, the impact of pre-acquisition reserves and everything. So a lot of calculations are there.
Yes, sir. Ind AS 110 is going on at this time.
Yes. So these are such adjustment which will remain same. So once you determine the value of these adjustment, it is going to remain same throughout the lifetime, till the time there is no change in the stake or equity or whatever it is. So that's why they are known as a permanent in nature. When I talk about current period consolidation adjustments, okay, now these current period consolidation adjustments are of such nature that they change each and every year. For example, intercompany transactions. Because this year I might have a sales of this much amount with this company. Tomorrow, next year, I might have a different sales. So intercompany transactions, intercompany sale, intercompany things are kind of a scenario which may change year on year. For example, unrealized profit on inventory or assets. Okay, elimination of unrealized profit. So you will see in your FR also calculation of unrealized profits and their impact. But again, these are the current period consolidation adjustment, because they are not going to remain same year on year. Their value will change. You might have unrealized intergroup profits, you might not have unrealized intergroup profits on the next year. Another very important, I would say, very important current period consolidation adjustment. I'm going to talk about important current period consolidation adjustments. It's known as a harmonization. Harmonization of different accounting policies. That is, when you understand the accounting policies, you may identify some differences. Now, these differences are required to be harmonized. That means, let's say, for example, the subsidiary which is outside India, that's the sub INC, is calculating depreciation on straight line method, but you are following, let's say, accounting estimate or some other. It's an account estimate. Let's say some different accounting policy is there. Okay, revenue recognition. It's something, different way they are calculating the revenue, which is not aligned with the way that you are required to calculate as per your Ind AS 115. Okay, in that case, you cannot directly consolidate. No, you have to first of all harmonize. That means you need to bring their accounting policy in line with your accounting policy, and you need to give, the management usually give, impact of bringing in line with these accounting policies. And then whatever, the adjustment comes, you need to audit that adjustments. So these are known as the harmonization of the accounting policies and the impact that is given based on the harmonization. Got it? Any doubt with respect to this harmonization of different accounting policies? Okay. Another very important. Now see, this particular point you have to think, and that is based on directly this one. So this particular point is based on this one. So based on this one, what will be the, adjustment that is required to be passed? Okay, apart from here, let's say accounting year adjustments, that is already taken care of. Apart from accounting year adjustment, which are the adjustments that is based on this particular different accounting year that is required to be considered over here? So a particular area which is, related to this particular thing and is required to be considered over here. Anyone? Related to this and required to be considered for CPCA other than the accounting year adjustments. This is I have already taken. Come on, guys. Very important point. No? Any idea? Conversion of GAAP to Ind AS. Yes, very important. That is, I was about to come on that. This is not this one, but again, as you have already mentioned, conversion of GAAP. Very good, Jenny. Okay. So this point is not conversion of GAAP. So this is something different than conversion of GAAP, which is related to accounting year, but not conversion of GAAP. No? Okay, I'll tell you. How many of you have read about SA 560?
Subsequent events.
Yes. If you have a different accounting year, then the period after the close of financial year but before the signing of audit report will be different.
Yes, sir.
Then accordingly, subsequent events are required to be considered accordingly. So each and every company will have a different, component, I would say. Each and every component will have a different subsequent events or the period for the subsequent events, and that are required to be considered. Sometimes they might coincide with the holding company's subsequent events or sub period, but sometimes it may be beyond that. So accordingly, you need to think. Let's say, for example, if I give you a hypothetical example, let's say holding company, holding limited, April to March. Okay. Let's say from March till the June, hypothetical example, March 2024 to June 2024, the date of audit report. Okay. And date of financial statements. This is your subsequent, this is period, this is the period during which if the event is happening, I'm required to consider. Okay, I'll say subsequent event period. Okay. Now, let's say there is sub PTE limited. Its financial year starts from, let's say, June to it ends on May. Hypothetical example. So here it ended on May 2024. Audit report, let's say, is going to come in the month of September 2024 over here. So the subsequent event period is September 2024, or rather, let me do one thing. May will be here somewhere in between, May 2024. And the subsequent event will go to, let's say, September, date of audit report and date of financial statements. Okay. So when the audit report is getting signed for the holding company, that is the CFS audit report, at that time, the subsequent event of this particular entity is still going on. Or you might not have the audit report of this particular entity. You have an audit report of a earlier year, but you might have, some procedures performed by the component auditor. So there could be, complexities involved with respect to the subsequent events because you could have a different accounting year. Again, you need to, think of, okay, till what period, what is the period for which you have considered the subsequent events? What are the what is the date? Again, my events that I will consider is till the date only, June 2024, because this is the date of audit report for CFS. I will not consider any event beyond that unless and until the other requirements are there of SA 560. But again, I need to ask auditor, please consider events till this particular date. Don't only consider till the end of your financial statement. If your financial statements are getting over at May, please do not consider till that. Consider beyond, at least till the date of audit report on the consolidated financial statement, minimum. Clear with this? Any doubt? Okay. On that, sometimes you have a adjustments, like I'll give you one more example. On this very, sometimes you have a complex adjustment of deferred tax. So when there's these kind of current period consolidation adjustments. So sometimes there is a deferred tax adjustment on these temporary differences, elimination of profit and loss resulting from intergroup transaction and everything. So sometimes you need to also consider deferred tax adjustment on these temporary uh, temporary differences. Okay, again, based on the Ind AS, I'll not go into much detail, but yes, that could be one of the adjustments. Clear? So these are the things that an auditor of the group auditor you need to consider.
Excuse me, sir.
Yes.
Sir, in the example you have told regarding the holding company and subsidiary PTE, if the consolidated financial statement will be the period of the holding company, then it will consider only June to June period.
See, I need information April to March.
Yes, sir. That's
Yes, I need information from April to March. Now, one of the financial statement that will be prepared by the PTE Limited will be from June to May. So it will not have a period April to May in that.
Yes, sir.
Correct?
Yes, sir.
Now I need to ask auditor to provide me that as a supplementary information so that I can consider that. Plus, and I need to also ask him to exclude the current periods April and May because that is not relevant for me.
Yes, sir.
So these are the adjustment I need to perform. Okay, remove this particular period, add this particular period, give me these two information separately. So I'll ask component auditor, give me these two information either separately or give me directly the numbers of April to March.
Okay, sir. Then, sir, can we consider it as a special framework, financial reporting framework, or
Special
not?
purpose financial reporting framework?
Yes, sir.
See, in that case, again, it's not a clear-cut yes or no. You can consider, but when I talk about different accounting year only, I'm not talking about any other different format of reporting. If there's a different way of financial reporting for different purpose, yes, I can still consider, okay, this is special purpose financial framework. Sometimes you have assignments with respect to group audits, which are
Yes.
not the statutory audits. They are specific group audits for some different financial period, and at the end you have to report. Management has to report in a different format. You have to audit that different format.
Yes, sir.
So that depends upon the assignment or engagement based, case to case basis.
Okay, sir.
Can be, cannot be.
Yes, sir. Clear now. Thanks.
Any doubts? There could be n type of adjustment, n number of type of adjustment. So there is no limit on the current period consolidated adjustment. There could be, you name it, you can have like OCI related, even earnings in foreign exchange, conversion of foreign currency numbers. A lot of things can be there. Okay, dividends. So I'll not go into that much detail for the adjustment because adjustment can be within each and every area of a financial statement. Okay, so you can think of what level of adjustment can be there. Now this was the part that I was talking about with respect to your audit procedures and consideration. Now comes the very important part, that is the reporting. Now we will see reporting. When it comes to the reporting, my first question to you guys, am I required to comply with SA 700 series when I'm reporting on consolidated financial statement. So am I required to comply with SA 700, 701, 705, 706, 710 and 720? Am I required to comply with these SAs? Answer is yes. Correct, Sania? So yes, I am required to comply with these SAs. That means the way I issue audit report under standalone financial statement, I need to issue audit report under consolidated financial statement. Yes or no? The way I have modifications, similarly I will have modifications. The way I have EOM and OM paragraph, similarly I will have EOM and OF paragraph. Other informations, comparative periods, corresponding financial corresponding figures, everything will be same. So there will be no difference when it comes to the reporting, except there are certain points I will discuss in special consideration. But apart from that, when it comes to the reporting, your report is on the similar lines what we have already discussed with respect to the standalone financial statement. And to show you, I'll show you one example. Again, do not focus on the name of company, because again, it's a publicly available data I have taken from there. I'll show you one example. Yeah. See, this is independent auditors report. Okay, very important. The term independent that we are required to use in standalone will be using over here. Report on the audit of consolidated financial statements. It's a consolidated financial statement. This is the addressee. So remember, we have discussed, when we discussed the audit report on standalone financial statement, you discussed that it should have a title and it should denote that it is an independent auditor's report. Then you should have addressee. Okay. Then the first paragraph should be opinion. Similar way, we have opinion over here. If you see, it says that we have audited the consolidated financial statements of this particular company. Okay, and its subsidiaries, very important. Subsidiaries, they are specifying. Okay, together known as the group. Its associates, joint venture, joint operations. So they are specifying these. Okay, we have audited including these. Okay, and then they have the period, and they identify each of the financial statement. Remember title of each FS. For example, statement of profit and loss account, consolidated balance sheet as on this March, consolidated statement of changes in equity, consolidated statement of cash flow, notes to the consolidated financial statements and everything. Then their opinion, that in our opinion, best to the information and explanation given to us based on the consideration of the reports of other auditors on separate consolidated financial statements, financial information of such subsidiaries, associates, joint venture, joint operators as were audited by other auditors. Very important. So not only information and explanation, but based on consideration of reports of other auditors on your separate consolidated financial statement, separate or consolidated financial statement, financial informations of such subsidiaries, associates, joint ventures, joint operations, okay, as audited by other auditors. Now tell me one thing, why we are writing consolidated financial statement over here? Why we are specifying again this word? If consolidated financial statements were given to us, then why we are preparing? Can anyone tell me? Come on, guys. Question to you. If consolidated financial statement was given to company, then why they are preparing again a consolidated financial statement? And if company is already preparing, then why to prepare again?
Sir, it may be if the parent company whose subsidiary is also the parent of some other subsidiary companies, then it will also require to prepare the consolidated financial statement, and that will give to the parent company. Then the parent company will become the ultimate parent of that companies also.
Absolutely correct. So when, let's say, for example, you have A, B, C, D, and you have E, F, and G. Let's say you have other, I, N, J over here. Like this is the structure, let's say, for example. Okay. And then these again, and this is again. Let's say this whole bunch over here is outside India. Because of XYZ reason, these are the companies outside India. In that case, they, based on the local law, G might need to prepare CFS for I and J. Could be possible. And then this CFS will be given to D, and then somehow D then might give another CFS, or could be some scenarios. Okay. So there could be a scenario where G is preparing CFS for I and J because outside India, different requirements as per the local law, they are required to prepare. And then on the basis of that, they have to prepare the consolidated financial statement for the whole A holding company. So that's why they are mentioning separate consolidated financial statements, financial information, subsidiaries, associate, joint ventures, joint operations as audited by other auditor. And then you have the aforesaid consolidated financial statement, and everything is same. Rest everything is same. That given true and fair view in conformity with the accounting principles and of the consolidated state of affairs of group of associate, joint ventures, joint operations as on this particular date. So rest everything will be same except for this particular part. And now one important another part, basis of opinion. In my basis of opinion, I not only refer to the evidence that I have obtained, but I refer that we are independent of the group, its associate, joint ventures, joint operations. Okay, this is there, and we believe that the audit evidence obtained by us, along with the consideration of the reports of other auditor referred into other matter paragraph section below, is sufficient to provide basis for opinion. So we are in providing reference to the reports of other auditors, okay, on the basis of opinion paragraph also. Clear? Any doubt with respect to this?
Clear, sir.
Okay. Now coming to another area is key audit matters. How will you determine key audit matters? How will you determine key audit matters? For consolidated financial statements, if I ask you determine key audit matters, how? Come on. Very important question, guys. Based on the CFS as a whole, okay. Apart from this, is there any other source for the key audit matters. Can I consider key audit matters reported by other auditors if they have reported in their audit report? Can I consider key audit matters that are reported by other auditors in their audit report? Yes, I can consider. So, key audit matters are not only the matters based on the consolidated financial statement, but on the consideration of the reports of other auditor on separate or consolidated financial statements of component audited by them. So not only with respect to the consolidated financial statement, but I need to consider the matters which are already reported in the audit report of component auditors. Okay, and accordingly, I need to consider. See, over here, they might have given some different with matter which might not be related to the company, but it's a component. So component auditors industry experience. So it is related to the component. Again, you might have some other matter with respect to the component. So these and this might be with respect to your current. So that's why they don't have the component over here. They have written test of details. Otherwise, they were writing okay component auditors expertise. So it can be combination of the matters that you have identified and the matters that has been identified by the component, both. This is how you can refer to key audit matters. So this is how you can provide about key audit matters. Rest everything is same. The way key audit matters we are required to report, the same way it is required to be reported over here. Now, very important point that I will be considering. So this is how the basic reporting is there. Now I'll go to one category more about, that is special considerations. Okay. Remember, when we were discussing about other matter paragraph. That we have this particular specific paragraph only I have discussed at the time of SA 600. That how reporting under SA 600, SA 600 requires us to report in other matter paragraph when we have relied upon the work of another auditor. Yes or no? Remember something from SA 600?
Yes, sir.
Plus, again, I discussed the same point when I was discussing SA 706. At that time, I also again discussed that, okay, there was some requirement under SA 600 to be reported under other matter paragraph. The same I'm reporting over here. Now, here, if you see, they will be saying that, okay, some of the financials, like, okay, these are the financials, 58 step down subsidiaries are there that has been included in the financial statement. Okay, some might be there. Let's say I'll show you one more. Okay, yeah, two of these step down subsidiaries are located outside India, whose financial statement and other financial information have been prepared in accordance with the accounting principles generally accepted in their respective countries, which have been audited by other auditors. The group's management has converted these financial statements of such step-down subsidiaries located outside India from the accounting principles generally accepted in their respective countries to accounting principles generally accepted in India. So this particular point is nothing but your current period consolidation adjustments, conversion. Remember harmonization I was talking about?
Yes, sir.
This is the harmonization of accounting policies, conversion of gap, the way you specified. So these are the things that is done by the management. And then auditor says that, okay, we have audited these conversion adjustments made by the group management. So audit of your current period consolidation adjustments, harmonization of accounting policies, conversion of gap. Now, remember I was talking about one specific area where I was saying, okay, there could be different accounting period, and there could be, scenarios where you don't have the accounting information or the audit report for that particular period. Now see this particular point. The financial statements or financial information of 3 subsidiaries and 11 step down subsidiaries whose financial statement reflects this total asset, total revenue, this, cash flow, this, for the year ended this on the date, as considered in the consolidated financial statement, have not been audited either by us or by other auditors. It is not being audited by anyone. So you might have a question, then if this is not audited, then why we are not qualifying or modifying our audit report? We just now saw the opinion. It was unmodified opinion. Why we are not modifying our opinion? Anyone? Anyone? Why we are not modifying our opinion over here? Yes, Sanya, very good. I remember this, I discussed with an example. See over here. In our opinion, and according to the information and explanation given to us by the management, these financial statements, financial information are not material to the group. This is based on your group materiality. This is why group materiality is very important to calculate. Then only you will be able to identify that based on the group materiality, whether the component is material or not for me. Now this will, when you will allocate materiality to component, then also I will come to know whether any misstatement in the component is material to me or not. So there could be scenarios where you don't have the audited financial information because of the different accounting year, because of some different circumstances, different scenarios. It may be, there is no audit requirement in that particular local, jurisdiction. At that point in time, the group materiality will tell you whether to modify or not modify, or whether to perform any other audit procedures to get sufficient and appropriate audit evidence. Clear with this? Okay. Now tell me one thing. I have another question, that is, again, we are talking about special consideration. So the special consideration is CARO 2020. Whether applicable? To CFS? Yes or no? Whether it is applicable to CFS? Okay, Sanya. Yes or no? Okay. IFC. Okay, reporting on IFC. Internal financial controls with respect to the financial reporting. Okay. Now that whether applicable to CFS, IFC reporting. Yes or no? Quickly. Yes. Okay. If you are saying CFS is applicable, then I think you are not seeing the lecture appropriately, or you're not going through that CFS. If you think CARO is applicable to CFS, then you're not going through that lecture appropriately. I'll show you why. I'm not sure when we were discussing CARO, you went through that particular, you were present in that lecture or not. But when it comes to the CARO, only one specific para is applicable. That is para 21. Remember, wherein you are required to report the qualifications, unfavorable remark, adverse remark in the Caro report of the subsidiaries or joint ventures or associates where there is a unfavorable remark. Otherwise, no other para of Caro is applicable on the consolidated financial statement. Remember, we discussed this particular point. So this is something, para 21 is only applicable with the Caro. But yes, IFC applicable. So you will have a report on IFC. Similar way that we have a report in the standalone, similar way we have a report over here. Okay, so that is there. So you have a internal financial control with reference to the aforesaid consolidated financial statement. You will have a report on that. So that is properly applicable. Now coming to the rest of the areas of 143.1 and 143.3, yes, these are applicable. See, this is report on other legal and regulatory requirements. You have, report on 143.3, which are the matters that are there, including reports on the matters which are referred to in Rule 11. Okay. If there are other matters which are there in the Rule 11 that are required to be reported, those are also there. For example, this one. See, one of the requirements under 143.3 was whether the books of accounts have been prepared by the company, and if yes, then whether these books of accounts in Rule 11 are being kept in a software in India and periodic backup has been taken or not. Remember, there was one such point. Now see, for the matter stated in paragraph 2B F on the below reporting under Rule 11G of the company's audit and auditors rule, in case of one subsidiary, the backup of the accounting software which was used for maintaining general ledger, which forms part of books of account and other books papers in electronic mode, has not been kept on servers physically located in India on a daily basis from 1st April to this October. And in case of one step down subsidiary, the backup of accounting software used for maintaining general ledgers and all that stuff was not kept on server. Further, the backup of accounting software used for this particular thing has not been kept on servers physically located in India. So all the matters are applicable the way were applicable on the standalone financial statement. Okay, there is nothing different which is when it comes to 143.3, because section 129.4 says you have to apply in a similar way. I'm applying it in similar way. Yes or no? Similar way. See, audit trail. In respect of two joint operations companies, the accounting software for maintaining its books of account has a feature of recording audit trail audit clock. However, the feature was not enabled throughout the year. So similar way, all the points that were applicable on the standalone financial statement with respect to 143.3 will be applicable over here, including your Rule 11. Rule 11G points are also there. Clear? So Rule 11 points are also required to be reported in a similar fashion, the way they were there with respect to your standalone financial statement. No difference is there. And at the end, you have your similar date, signature, place, and UDIN. This is how your consolidated financial statement reporting is done. So this is the reporting on the audit of CFS and your special considerations. Any doubt with respect to these points? So we discussed the CFS and then we discussed the special considerations like Caro, unaudited, your components, IFC, 143.3, okay, and other things that are there. When the component is different, like harmonization. So component auditor is different. Any doubt? Any doubt with respect to these points? Okay. If no doubts, then guys, I want each and every one to go through the chapter. Okay. There is no alternate of reading. You have to go through the study material. You have to go through the topics which are given in the study material. I have covered everything basically. We have discussed a lot of things out of this particular point, like majority all of the things have been discussed, but again you have to go through this study material. Okay, like auditing the consolidation we have discussed. Then it comes the consolidation in case of applicable of Ind AS 110, special considerations, consolidation adjustments. But a reading from your side is also required. There is no alternate of reading the study material. No alternate. Trust me. Management representation, reporting, okay, all these stuff we just now discussed. Components not audited. Okay. But till the time you will not read, you will not understand, okay, the chapter in its full. So what I want from your side, I want that please read the chapter, number one. Number two, practice the questions of this chapter. In the start of the next lecture, I will take questions of this particular chapter so that we can have again quick revision. And at the similar time, it will also, I would be expecting from you to answer the questions, because by that time I would expect you to read the chapter. Okay. So before starting the next lecture or next chapter, I will take up the questions on this chapter. We will discuss, we will have a quick recap of type of thing. You have to read the chapter, you have to practice and bring up your doubts on this chapter or any other topic. Perfectly fine, but bring up your doubts. That is very important. Okay. So that is my expectation from your side. Please, I would request you to read, to practice. Please. That is really important. Okay. If no further doubts and if no further queries, then yes.
एक्चुअली क्वेरी नहीं है बट रिक्वेस्ट करनी थी प्लीज अपलोड द नोट्स रिलेटेड टू द अर्लियर लेक्चर एक्चुअली यानी बॉस पोर्टल पे चैप्टर 6 के बाद कोई
नोट्स
नोट
नहीं दिख रहे?
नहीं.
Let me check why it is not appearing. Let me check again.
Yes sir.
I have uploaded the notes, but let me check again why they are not appearing.
एक्चुअली चैप्टर 5 एंड 6 एक साथ आया, फिर बाद में उसके बाद कोई नोट्स नहीं अपलोड यानी शो नहीं हुआ वहां पे.
Okay, let me check. No issues. I'll check today itself, and I think by the before start of the next lecture, you should the notes should appear. If they are not appearing, I'll re-upload them. Don't worry.
Okay, thank you, sir.
Yeah. So, any other doubt, guys? Any other doubt?
Sir, I have a doubt.
Yes.
So why is goodwill presented as permanent consolidated adjustment even though it's subjected to impairment?
See, it is subject to impairment, but in every year you don't have an impairment. Okay, so impairment is also kind of a scenario which is non-recurring kind of thing. Non-recurring means you don't have each and every year impairment. You do impairment analysis, you do impairment assessment, but you do not impair the investment each and every year, unless and until it's a very different scenario where the company is making losses, company is not performing, different scenario. But usually you don't have impairment provisions each and every year. That's why it is still considered as a permanent consolidation adjustment.
Okay, sir. Thank you. Sir, and your teaching is absolutely wonderful. I used to be scared of audit before your classes, and it's my second class just, but
Okay.
I can see the difference, and I'm not so scared of it anymore. Thank you, sir.
Thank you very much. That is the only target I have, to make this subject easy for you guys. Thank you, Pooja. Thank you very much. So if no further doubts, guys, thank you. Thank you for your time today. I'll see you in next section. Thank you.
Thank you, sir, and happy Makar Sankranti, sir.
Happy Makar Sankranti to all. Thank you. Yes.